DSP Multicap Fund NFO. Will this NFO help you create wealth or will it just hurt your wealth creation process? Let us review and analyze this in detail in this video. This DSP Multicap Fund NFO is open till 24 Jan 2024. Before getting to know about this DSP Multicap Fund, let us first understand what a Multicap Fund is. A Multicap Fund is a diversified mutual fund that can invest across market capitalization. Here the fund manager can invest in small cap, mid cap and even large cap stocks. Here the fund manager must invest in small cap, mid cap and large cap stocks. Here, at least a minimum of 25% of the capital must be invested in each cap stocks. The remaining 25% is what is under fund manager's control. It is an open-ended scheme and it uses Nifty 500 Multicap 50:25:25 TRI index as its benchmark. The minimum amount for application is Rs 100. There is no entry load in this scheme. And the monthly SIP is minimum Rs 100. The fund manager is Chirag Dagli. The investment objective of this fund is to provide investors with opportunities for long-term growth in capital from a diversified portfolio of equity and equity-related instruments across market capitalization. Next, we'll look into a DSP Multicap Fund investment strategy. It provides diversified allocation across market capitalization, looks for the viability of the business rather than the sector of operation. It looks to invest in undervalued stocks, and there is active stock selection process involved here. It is not an index fund, but rather it is an actively managed fund. So the fund manager here looks at the balance sheet of the fund and looks at the profitability and sustainability and then look to decide whether to invest in this company or not. Next, we will be looking into the potential merits of this DSP multi-cap fund. Since it is a multi-cap fund and it can invest across various sectors, the sector bias might get eliminated. Since it invests across market capitalization, it can align with your long-term goals. Here, the fund manager has the privilege to invest across different market caps as well. Since the fund manager has the flexibility to invest in small, mid and large cap stocks, he can do a reasonable diversification over here. And when you compare it with other small cap and mid cap funds, there's only less investment risk involved in it, as the fund manager should at least minimum invest 25% of the capital in large cap funds. It has the potential for capital appreciation in the long term. When I say in the long term, I am referring to a time frame of at least 7 plus more years. Just like knowing the potential merits of this plan, it is equally important for us to know the potential demerits of this plan as well. Since the fund manager is forced to invest in small, mid and large cap stocks, there might be a chance of over diversification as well, which can in turn reduce your overall returns. The fund management style is unknown. Either you can follow a contrast strategy, growth strategy or a momentum strategy. It is like taking a blind risk. And since it is an NFO, there is no track record. It is always better to choose a fund after analyzing the track record of the fund and then look to invest in it. As there is no track record and portfolio for this fund, we cannot analyze the performance and take calculated risk. Here, as an investor, you have no clear idea of what kind of funds or stocks are getting selected. So as an investor, it's like taking a blind risk in your investment portfolio. So far we have discussed both the advantages and disadvantages of this fund in detail. Now it's time for the final takeaway. If you are looking to invest in a multi-cap fund, then why choose DSP multi-cap fund? There's already existing mutual funds which has a good track record of 7 to 10 years. Without proper portfolio and research, your investment becomes risky. It's like taking a blind risk in your investment portfolio, which is not good. And if you have surplus amount and if you want to invest in a trial basis, then you can invest bare minimum and see how the fund performs in the future. Before looking to do investment in such investment schemes, it is always better to approach a financial planner or a mutual fund distributor, as the fund manager or mutual fund distributor is able to verify whether the investment objective of this fund is able to meet your personal investment objective. If it does so, then he will most likely recommend this fund for you. And he also verifies the risk involved in this fund and sees whether you have the same risk appetite. Then he is most likely to recommend the fund for you. And he will also check on the overlap ratio and see whether these fund stocks already there in your portfolio. If there is more stocks in a similar way, then he will not recommend that fund for you, because if there is a high overlap ratio, then the possibility of you generating higher returns become lesser. So for all this, a financial planner or mutual fund distributor will be very much helpful for you. If you have any doubt regarding this or any other financial or investment decision, don't hesitate to book an appointment with our financial expert. The link to the appointment is given in the description below. And also, would you like to know more about finance and investment? Then we would recommend you to attend our live webinar. The link to the webinar is also given in the description below. The webinar is absolutely free. If you like this video, hit like, and if you are new to our channel, please do subscribe.